Hello and welcome to this week's edition of Straight Talk with Bren O'Brien and Tim Rowe from the Straight. Today, we have a look at the conclusion of the yearling sale season. We talk championship mares and their mates, and we speak to Inglis James Price about the upcoming Great Southern Sale. In racing news, prize money levels are on the agenda. Racing Queensland's acting CEO has his term extended, and who are racing's richest people? And finally, in wagering, Mixie gets the upper hand at its Play for Points bet, and an extract from a special podcast on the state of Australian racing and wagering from two men who derive their living from betting on it. Tim, plenty to talk about today, but the National Sales Series is done and dusted in the Gold Coast. What did you take out of the 2 weeks up there in terms of the way the trade went? We've spoken about the Winley and Mares market. How did you sort of reflect on the yearling sale and how it sort of panned out, Tim?
Oh, there's always the national sales, sort of a collection of, yes, there's some breeders or vendors that probably target that later foal, or there's a reason why you end up there. But generally speaking, you're targeting an earlier sale, and for some reason a horse got sick or there's an injury, or for some reason you don't end up an earlier sale and you end up at the national sale on the Gold Coast. So it's a real collection of yearlings. Some people don't want to. The next option is the 2-year-old sales later in the year. Some vendors or breeders don't want to take that option, so this is our last chance saloon for, I guess. And we saw $850,000 extreme choice that bought by yearling. What was interesting was, a couple of years ago, Newgate, to try and maximise extreme choice, sort of started breeding into the new year and Northern Hemisphere time as well. And so some of those went through. Jerry Harvey bred the top lot, I think, was a December foal. So it wasn't, but there was, January, February foals as well. So it was, very, very interesting that the market still gravitated towards those. And I think Go Waterhouse and Adrian Bott and Bruce Slade are possibly thinking Royal Ascot to fill things. A lot has to pan out of and go right with a 2-year-old full stop, let alone trying to get them around the other side of the world. But it was quite an interesting sale, and there's a huge pinhook result as well. $1,500 into $525, stuff of dreams, isn't it? If you can pull that off, a Harry Angel colt, 2 Hong Kong buyers going head to head.
Yeah, it's an interesting one, isn't it? That that pinhook result got plenty of coverage, and it probably gives a lot of heartening. Those we'll talk about to James Price in a minute about the Great Southern Sale, but those sort of fishing around the bargain basement end of the Winley market might be a little bit more enthusiastic about that. And it's the nature of the industry. You do get these extraordinary returns sometimes. It does go the other way a few times too. We've seen plenty of high price horses turn into cheaper horses down the line. It's the way that it works. What I wanted to also point out, Tim, out of the mares market last week, I did a bit of analysis on that this week. I wanted to touch on a couple of key stats, and it was the percentage or the average price of in-foal mares versus race fillies out of the major mare sales, and that includes English Chairman's, English Broodmare Sale, and National Broodmare Sale for Magic Millions. The average price of a race filly this year was $468,510 from those sales, which is up about over 100,000 since last year, and almost not quite, but up for about 180,000 from 2 years ago. The average price of a mare in foal was $175,000. We also saw the amount of, I guess, the market switch significantly now towards that race fillies market, and the bulk of the aggregate spent in that space. It sort of appears to me, Tim, that we're in a situation now where these race fillies are in such great demand, and the in-foal mares market is dipping away, and probably conceivable to think in probably 2 to 3 years' time that'll be very much a boutique market in the live auction environment.
Well, there's two. Yeah, it is. For as long as I've been covering it, the race fillies sessions and sales have just been hugely popular. I guess people like to be in control of their own destiny with matings and different things like that, and just getting hold of these hugely valuable mares that don't tend to come back on the market. So I guess that's why they're so expensive. The in-foal mares has always fascinated me in that quite often you get them for a discount because, even though you're a year further down the line and, before and closer to getting a return, but seems to sort of, you pay a penalty at times. As someone joked at the sale last a couple of weeks ago, how do you devalue a mare, put them in foal? But it's not quite like that. I think the averages being up can also be that a lower grade of stock don't go to a live auction now because of the costs and are sold online. I think that pushes the averages up, obviously. But Barry Bowditch told me, and after the sale, he's quite pleased how well the infold mares sold. So there is still demand there. It's just, it's just there's such a premium for those race fillies and mares.
Yeah, and it just would appear to be the case that that infold market, particularly in the sort of middle to lower end, will become a strong digital focused market moving forward. I mean, this is the nature of the market and where things are, and I guess the logistics of it. And you can't see longer term how people are going to continue to bring those middle to lower end infold mares to live market, because they're probably not going to think they've got to get any form of premium for them. Race fillies are different, and I think probably you will probably see in the next few years that the Magic Million sale, for example, might be a one-day sale with a big race filly section and some premium involved mares thrown in, maybe 1 or 2 days, and work it out from there. It's hard to see how the market's got to turn around in that regard, because the ease of access through digital and through other markets is just so much easier, isn't it?
Just on that, there is advantages to going to a live sale. There was a classic example of the Gold Coast, where a Shalar mare was bought online. I think it was for 30,000 through Inglis Digital about 6 or 8 weeks before the sale. And whatever happened, there was the new owner decided the mare wasn't for him. And so the buyer, an agent, went, okay, I've got to put it through a live sale. Very good looking mare, it seems. And she sold for 210,000. So putting horses in front of buyers can see them with their own eyes. If they're good looking, there's definitely advantages to putting them in a live auction. I guess that's being either, if you're not an agent or a stud master, talking to people that have got that experience to go, where is this best place to sell this mare or horse, full stop.
Right, and joining us is James Price, Victorian Bloodstock manager for Inglis at the moment. James, thanks for joining us. We've had a couple of weanling sales to date in Sydney and the Gold Coast, and the Great Southern and NZB to go this season, I guess, this weanling season. How have you seen the weanling market so far with, I guess, what we've seen in Sydney and what's gone on across the board?
Look, I think it's been a tremendously strong weanling sales series. I think we were very fortunate with the numbers we got in Sydney, and also I think that strength continued on into the Gold Coast sale. Look, there's no doubt that the pointy end of the market is getting pointier. We talk about that in terms of yearlings, in terms of mares, but also I think there's it's being seen in the weanling market as well. Yeah, I think it's probably evident that the majority of weanlings that are bought are aimed to be pinhooked and bought to then try and turn over as a yearling. And I think people are becoming more conscious and more savvy as to, when they buy weanling, as to what sale that weanling may fit in terms of what yearling sale it'll get into next year. So I think those weanlings that people perceive as, let's call, not a select sale weanling, are probably vendors are finding it hard to move those. But those horses that people are identifying as a select weanling, I think those vendors are being really well paid for them.
James, on the Great Southern, you've put together, it's talking to buyers is a lot. Most of the pinhookers absolutely love Great Southern for the value it provides, and vendors obviously are supporting it as well. How have you seen this year's catalogue shaping up?
Yeah, really delighted. It's obviously a catalogue that's smaller in numbers than it has been. Last year was 2 days, and we got to a point of what was the most number of horses we could sell in a day, and I think we've reached that at sort of 325 now that we've just closed off the supplementary. But we feel it'll be a very jam-packed day of selling, but I think it's going to work very well in that Monday's a public holiday, which will be very much an arrival day for the weanlings, and then weanlings will start parading Tuesday, Wednesday, and Thursday, and sell on the Friday. So, but in terms of the quality of the catalogue, really, really delighted. I mean, I think headlined is the 11 Toronados we have entered. Wonderful number of colts. The market's really, really warming to those. He produces such a good looking horse, which is fantastic. Also, we've just closed off the supplementary. We've got 2 Zoo Star colts entered for the supplementary. Last year saw the highest price weanling come out of the supplementary. So delighted to have those represented. But from talking to a few buyers, they think it's the strongest Great Southern catalogue that we've put together. And I certainly agree with that, in the fact that it's a smaller number, but the quality is certainly there. I think vendors have probably become better at identifying those weanlings that probably would fall short of a live sale, such as the Great Southern, and found other avenues, particularly online, to sell those because they've identified those weanlings as having a smaller value. So, in the fact to reduce their costs in terms of entry fees, preparation, and all the rest, they've chosen to sell online. So I think that's
On
definitely the
that,
way to go.
sorry, on James, on that, in 2019, Great Southern was 4 days, and yearlings and mares, and I think there might have even been tried horses and things like that. It has changed a lot pretty quickly, really. Is there
As
thought to, providing, brood mares for one, that was, I think there was brood mares last year. Is there an avenue for Great Southern to sell live or mares at a live auction again, do you think, or has it just moved on from that?
I don't think so. Actually, in 2018, it was actually 5 days, which is extraordinary to think. Only in 2018, it was a 5-day sale, and now we're down to 1. But look, we made the decision to not advertise a broodmare session to the Great Southern Sale for the first time this year. And look, to be fair, we haven't really had any kickback from vendors. No vendors sort of said, "Where's the session? I need to enter a mare." I think the market's been become very receptive to selling mares online, and the online market now is very mature to sell mares, and people don't, a lot of them don't want to prepare a mare for a sale. They don't want to have to truck it to a complex, put it into a stressful environment, and do it that way. They realize that they can get a premium result online. So I think it's definitely a way of the market that those, let's call moderate mares, are best sold online.
James, what are you sort of hearing around the traps in terms of the sentiment ahead of this year and breeding and mating this year? And what can we expect in terms of numbers, in terms of the yearling crop from Victoria this year coming up? Obviously, for 2026, looking forward, and I mean, there's been talk around the board that probably numbers will be reduced. But what trends are you seeing? Are people being fewer mares commercially mated, or what's sort of the feeling around the traps?
I would say that the number of commercial mares being mated has remained the same. I think the foal crop we're seeing has dropped due to those, let's call, non-commercial mares not being bred. So, and they're typically the the product out of those mares are not offered for commercial sale. So I think, yes, the foal crop's dropping, but the number of horse inspections we do has remained the same, and I think it will remain the same. Look, I do think there was a drop off. We might feel it in 18 months, where less mares were bred in the 2024 season. We've just seen so less foals in the 2025 crop. It is interestingly that if we look at the numbers of farms that we visit over an extended period of time, so 5 years ago, here in Victoria and South Australia, we inspected horses on 200 properties. Now, 5 years on to 2024, last year, when we started our inspection period at the end of the second half of the year, we went to 140 farms. So that's 200 down to 140. So look, I think the smaller breeder is finding it tough, rising costs, very competitive in the sale ring. So I would suggest some of them are not breeding, and then also some are saying, well, this is not a commercial horse, I'm just going to breed it. But I think it is a challenge for the industry to keep that smaller breeder involved.
Seems Inglis have got, they've opened applications for the next intake of the Inglis internship, of which you're a recipient, and there's been some other well-known names, James Mitchell, Peter Toomey, I think Riverina's #1 bloodstock agent these days. He went through Inglis. It is a great pathway for so many people.
Yeah, many, many years ago, I did the Inglis internship, and I was incredibly fortunate that I was the first intern, and it was a program. I think it was the idea was born by Matt Rudolph, who was marketing manager at the time, and he came up with the idea that Inglis needed to sort of educate or bring through the next generation of bloodstock agents, and it was developed, the Inglis internship. So in 2006, I was actually working at a horse stable and doing some university study, and Amanda Mason, who was wife of Jim Mason at the time, said, "Oh, James, you need to apply for this." Look, I sort of was very naive to it, and I sort of did up an application and sent it in, and I was went through an interview process, and yeah, I was very, very fortunate. So it's obviously been fantastic for me, who's stayed in the company for the majority of that time. I left for a few years, but as you say, the interns we've taken on, Peter Toomey running a very successful bloodstock business, as is James Mitchell working with his father as a bloodstock agent, and the latest intern, Will Gardner, who we put on about 18 months ago, and he's now got a full-time job in the business. So I think one of the main reasons why I mean, this industry, as we know, can be it can have a little degree of clickiness to it. Who gets you a long way. But I remember Matt always saying, when he first, oh, there goes the camera. I remember Matt saying when he first did it, he wanted to find someone that wanted a role in bloodstock, but might not have otherwise had the opportunity just because he didn't have the connections. So I think that's why they probably gave me an advantage, because I didn't have many connections in the industry. But I think it's a wonderful opportunity for anyone out there listening to, throw your application in, hopefully you get an interview. It's a wonderful opportunity. Even if you're not the person for this internship, we've got your CV, it's possibly a chance to meet you, and there's just wonderful doors that can be opened. It's not a case of, look, at the end of the day, we're putting on the internship because we are wanting to find a future Inglis employee, and that's why we do it. But that's not saying that the working for Inglis as a bloodstock agent, you might discover that Inglis is not for you, but the doors that will open in a 12-month period will be fantastic. And it's not a case of you don't have to work for us, but you go and you have a wonderful experience for a 12-month period with us, meet loads of people, learn so much, and you're an advocate for the company for many years to come. So, anyone out there listening, just put your application in. We'd love to hear from you.
James, thanks so much for your time. All the best of Great Southern Sale, and yeah, we'll catch up with you soon.
Thanks, gents.
Thanks, James.
And rounding off now for the breeding and bloodstock section, Tim, I just wanted to mention quickly a couple of key matings for a couple of high-profile mares. We had announcements this week that Winks is going to Too Darn Hot, and prior to Jenny to I'm Invincible. So, it's the time of year, obviously, where people are making their mating plans, and always interesting to see how these very high quality elite mares, where they end up going with their matings, isn't it?
For sure, and I think I don't think any pedigree expert, or certainly the little bit that I've learned, I'm sort of big on physique and conformation is what people tell me, and I think Too Darn Hot will suit Winks. He's such an athletic horse that his stock doesn't tend to throw massive giant sort of horses and foals. So I think that'll suit Winks. Probably doesn't need size, just that natural athleticism that the Too Darn Hot seem to possess. Hopefully it all pans out and should produce a nice foal and hopefully a very good racehorse.
Move on to all things racing at the moment. Now, Tim, we had an article during the week basically focused around Chris Waller's sort of statement that on his preview last week that maybe we should consider reducing prize money and thinking about putting more money into infrastructure. It's had a very strong reaction. Look, I mean, anytime someone like Chris Waller sticks his head up, and Chris Waller has done well out of prize money over the last 10 years, as we know, there is a degree of criticism when whatever goes on, but he does raise an interesting point. There is a significant challenge within the industry about reduction of turnover and reduction of the amount of money that's coming back into racing, and some hard decisions need to be made. I mean, what do you make of the discussion around prize money, Tim, and sort of what impact it may have in terms of the broader I guess health of the racing ecosystem?
Like any money taken out of the prize money, or as we know at the moment, their revenues are dropping through wagering, so costs have to be cut, as we've seen through Racing Victoria. It will cause some pain, but if they cut prize money from the top, those small percentage that tend to win majority of it, which Chris admits and is been probably the biggest winner out of it, of the rise of prize money, I think they'll be still highly successful, highly well paid. But if the infrastructure is improved, or the tracks, do horses, you know, can they have another extra 2 or 3 starts of preparation, stay sounder, therefore the owners get greater return in that regard, which in turn generates greater reinvestment through the yearling sales and bloodstock markets, things like that. I think if you take a longer term view of improving infrastructure and maybe at the expense of prize money, it's not necessarily a bad thing because, as I said, horses can stay sound or race for longer. Owners have a better experience. Hasn't cost them as much money in some respects, perhaps. And yeah, it's all about the churn factor. I think is huge in terms of horses, owners. It's quite, as we know, it's difficult to get a good horse. So if you do get one that's capable of paying its way, if you can eke an extra few starts out of it, a prep or a career, it just heightens the experience and should, as I said, garner the reinvestment and the thrill factor, and they tell their friends and hopefully grow the game.
It's something we discussed a lot in our chat with John Walter and Nick Heathcote, a couple of professional punters. We'll have a special podcast from those guys over the weekend for people to listen to. We've got an extract in that podcast coming up a little bit later on, but it was this issue around, I guess, prize money return to owners, I guess the overall health of the the economic or the broader sort of commercial system of racing. It's certainly something that's a discussion point at the moment, and I think it's good that we sort of harness a wide range of views from people who run the game to people like Chris Waller to people who bet on the game to people who invest through Bloodstock. So part of our plan here in Australia is to enable that to happen. I think what happens is the challenge around the wagering landscape at the moment does cause a knock-on effect in terms of the administration of racing. And I think the upheaval we're seeing across the board, and we have seen across the board the last 18 months, has a lot to do with that. I think that the business models of PRAs, race clubs as well, is being impacted by this downturn, and the pressure comes on. Now, Queensland's an interesting case in point at the moment. It's under review from the new government up there. Interesting times for them. A couple of weeks ago, it was announced via the Strait, believe it or not, that the chairman's term had been extended by 6 months. And then again, it was announced this week via the Strait that Lachlan Murray, the interim CEO, had his term extended. Now, under the Queensland Racing Act, you can't be an acting CEO for more than 3 months. The Queensland government used what's called the Acts Interpretation Act, if you want to think of a nebulous term, if you ever heard one, to basically extend Lachlan for another 12 months or to when they can hold a recruitment process. Now, without commenting on Lachlan's suitability for a role, his background is very strong. He's got knowledge of racing Queensland, all that sort of stuff. It's an interesting time for Queensland racing. You can understand why the government have done this. They're doing this review. They want to come back. They want to assess the suitability of the structure, where the board sits, whether they need to refresh the board, which will probably happen. And then obviously the board then sits in consultation around the CEO. So it does give us a little bit of stability through this time, but it is a bit of a holding pattern for Queensland racing as they assess this new wagering environment and the funding, which is highly dependent on 80% of point of consumption tax revenue comes back to the industry now, and that drives a lot of their funding. So there's a lot of challenges within across the board. Queensland's got its own particular challenges. I said Lachlan Murray will be in that job for a little while yet, but I'm interested to see how that plays out going forward. Going down the other side of people who don't have issues with money, in terms of racing's challenge around funding, all that sort of stuff. Tim, you compiled a list this week of racing's richest people, and we do, there's a term that's been used before. Racing is a bit like rich man's super coach. Like, if you've got the money, you can have fun and enjoy yourself. It's not necessarily profitable, but it's good fun for people to be able to use it. I'm not saying that the people on this list necessarily do this, because there's a lot of serious investors in racing industry, but it takes a lot of money to invest in racing. And people often hope to have success in other parts of their life and their business life to be able to afford it, don't they?
For sure. And I'll use, interestingly, not on that Australian Financial Review list was a person called Darren Thomas Foods, and family, privately owned business. Maybe that's why it wasn't on the list. It's harder to find out his wealth, but he's certainly wealthy and invests a lot of money in racing. And as Mark Pilkington, his racing business partner, said to me not that long ago, I think it was after the Easter sale, that just grateful and glad that someone like Darren's passion is racing, and that he invests some of his disposable income, and he runs it as a business, but disposable income into racing rather than, maybe he's got yachts and things like that, but can spend that money elsewhere and, living in Europe or who knows what. But the fact that they get a pleasure, and Darren's just one example, Eddie Hirsch, Jerry Harvey, as people would know, spent a lot of money on racing and breeding and owning, and you know, the industry is better for it.
Yeah, it is interesting to see the names that are in there, and for someone like Nick Joachim is an interesting one too. Is obviously risen in prominence over the last few years through his lithium investments, but has strong investments through Hildene Stud in Hildene Farm in Victoria. So we're seeing people come through that, and there's people who aren't on that list because their wealth, as you said, either not covered or their overseas wealth, like Yuchen Zhang has clearly got from Yearling, has clearly got a lot of money to put into his racing interests from his other interests, primarily through what he's done in China. But it's an interesting game about how many of these high flying people, and historically that's always been the case. And if you look at the biggest operations, the Royal Cornwall Godolphin, they're funded by people of extraordinary wealth, because to be able to build something of that scale, you need to be able to do that. So it's interesting to have a look at those numbers and see how they work. The following segment is brought to you by Darley. There are good races, great races, and they're the ones that make stallions. Names like Danehill Dancer, Dabawi, Tuned Out Hot, and Kingman all won one of them, but Native Trail won 3. The Dewhurst, the National Stakes, and the Irish 2000 Guineas. He's a champion 2-year-old and from the same sire line as I'm Invincible. He'll make you part of the inner circle. Native Trail, standing this season at Darley. Finally, Tim, as we often do this week in wagering, let's have a quick review of what's going on here. PointsBet and Nixie. Nixie have upgraded their bid for PointsBet, $402 million now. It puts Better a little bit on the back foot in their deal for it. Now, people talk about, why are we talking about corporate mergers in the context of racing? I think it's significant because we'll have one of two outcomes out of this, Tim. We'll either have a major Japanese player, if you want to have a look back through, I did a story on Nixie a couple of months ago about how big they are and their footprint. We'll either have a major Japanese player sort of moving into the market into that sort of 5 to 10% range, or, now bear in mind, Nixie have also got BetM in Australia, or if Bet are happen to get across the line, then we'll have another player in that sort of over 10% sort of space, which will change up the landscape again. We've got challenges at the moment around about where corporate bookmaking is going in Australia, the challenge around profitability, all that sort of stuff. Competition's important. It's important to reinvigorate good markets and good racing. So it's one of the reasons why we talk about it. And it's also one of the key reasons that we talk to people like John Walter and Nick Heathcote, who are both pro punters, have both worked elsewhere in the industry. John is a jockey agent, Nick into the corporate wagering sector back in the day. Both guys have got some really interesting views on racing and where racing's at. They chatted about the wagering industry as well. We're going to have a full-length podcast which goes for around about an hour, which will be published this weekend. But we wanted to play you an extract of about 10 to 15 minutes of them talking particularly about the challenges around the racing and training operations and stuff like that as well, Tim. I mean, without sort of prefacing too much about what the chat's going to be about, what did you take out of the conversation we had with the guys early this week?
People like John, they're primarily, yes, they derive their income out of the industry, but they want the industry to be better. If the industry's better, they're doing better. Just it's the long term. I think thinking long term and how racing can prosper is what I sort of took out of it. Yes, there's a lot of challenges, but still, it's the greatest game in the world in some respects. The mental challenge, whether that's breeding, training, being a jockey, all sorts of every element to it is exciting and incredibly satisfying when you get it right. And it's not easy. That's why it's so exciting in many respects. But guys like John and Nick and everyone's passionate about it. And it's just, you can have different opinions about which way it should go. But at the end of the day, everyone wants the game to be better, I guess.
And here's part of our conversation with Nick and John. Welcome back to a special segment of Straight Talk with Bren O'Brien and Tim Rowe from the Straight. We're joined by Nick Heathcote and John Walter, discussing a variety of challenges around the wagering landscape and how it affects racing. And we've discussed the specifics of wagering, obviously, and the betting landscape and the punting landscape, and it's something you guys are obviously very much aware of day to day. But what fascinates me about this, guys, is I talk to similar guys in your position. I talk to you guys, I talk to other people around about your passion and knowledge of racing. And that, I guess, your willingness to be open and have conversations around what you think can be done better. Not necessarily saying, you guys are all wrong and we're all right, but actually your passion for the game and your interest in seeing the game continue. I wanted to have a quick chat with you guys about prize money. It was alluded to before, and the challenge that we've got in Australia at the moment. There's an article in the Straight this week around about Chris Waller, even who's derived $450 million in prize money in the last 10 years out of Australian racing, saying it's time we sort of have a look at prize money and start thinking about other priorities within racing. What have you guys seen? John, I'll start off with you because I know you've got some thoughts around this. What have you guys seen as being the sort of the impact of this long period of forever increasing prize money over the past 10 years?
Yeah, so I'm sort of in a unique spot where I was a rider's agent for a majority of it and got to deal with a lot of trainers. Number one, it's definitely, it's not just prize money. It's definitely sort of the COVID period, cost of living, everything's gone. It's definitely a perfect storm to make it a diabolical time for a lot to be a trainer at the moment. And I really think it's important that people like Chris come out because I was close friends with Chris when he first came out here, and I can promise you, they couldn't put petrol in the car. They really struggle. He might have 5 or 6 horses. They were praying, for results to make their business viable to stay afloat. So, and he doesn't have a short memory. He understands what it's like to be at the bottom of the totem pole. So, it's important that people like him come out and speak. But you look at. I just did some figures in there. Some of them are old, some of them are new because Racing New South Wales aren't that transparent with a lot of their figures, but sort of 28% of money going to 100 million, mega races, 500,000 and above, 35%. So, sort of 63% going to metropolitan racing, 10 to provincial, and then 27 to country racing. Doesn't sound that bad until, again, the numbers may be out, but it was sort of 75% of trainers are country trainers and provincial 16, only 8.5% metro. So the money doesn't get evenly dispersed.
I add to that too, John, that the ATC collect only 48% of wagering revenue in New South Wales. So they actually collect a minority of wagering revenue. So if you're benchmarking based upon wagering performance and you're lining up to prize money, it doesn't seem to make sense, does it?
It doesn't, and it's survival. It really is. Like at this point in time, I would say, to keep it as simple as possible, 99% of trainers try to align their costs to owners to break square, and then they make money from prize money. And at the moment, country trainers, the costs, I would say, we had a lot. I probably had 10 to 12 horses in work there at the start of COVID. I honestly don't see a point in having one now with a country trainer. It's just too expensive. It's probably gone up 50 to 60% in cost, and you don't get anything else for it. And the trainers are now, not only they're getting priced out of the market from a yearling perspective, being able to sort of turn horses over. They're finding, a bigger rate of bad debt and everything that comes across because you're dealing with horses that are on that merry-go-round we talked about, stuck in the benchmark 58 loop, and they struggle to pay for themselves. So it's becoming more expensive for owners. Trainers can't afford to charge what they need to stay alive, and the prize money doesn't compensate them anywhere near what it needs to. And you've also got, metropolitan trainers. Again, I think we'll touch on that later as well, sort of mega stables and what they're doing to sort of country racing as well, what they're taking out of it. So, it's very top heavy and the little guys, and I'm not talking just country trainers, country provincial, and I would say 80% of metropolitan trainers are completely and utterly under the pump. Prize money's not all about that, but it's just the overspend and where it could be sort of redirected is definitely a big issue, I would say.
Yeah, and I think that if you go back and dig out the figures, it all aligns, and it all started when TVN ceased to exist and collapsed. So then New South Wales wanted to pump up their own tyres and reach parity and do all these sort of things. But as John's already alluded to, like, that's a bit of a running joke within betting circles. These $1 million Group 1, $1 million pop-up mile races that you have in New South Wales, like there's a new one every week and none of it even means anything, and it's the same horses, and even the horses and the trainers just seem to be misplaced and sort of burning themselves out, where if you compare the two Goliaths that sort of set the tone with things, Victoria has always been, I guess, the number one and top dog. And in that time, they've seemed to invest more into their tracks. They've built Pakenham, which is a pretty good facility at the moment. They've replaced a lot of the metal running rails, and their upkeep on tracks, barring maybe Benalla and a handful of tracks, they're in really good condition. And I guess punters, as you know, probably if you're betting in the Queensland racing at the moment, if you don't have good racing surfaces, you've got nothing. Just ask, I guess, the Gold Coast Turf Club how important tracks are and track preparation there. Like, it's your be all end all. And if you haven't got your tracks in great condition, you're really behind the eight ball. And I just think that it's great to hear Chris talk about the prize money, and I guess it's taken the Rose Hill sale for everyone to sort of be brought up to speed, or to pause for a little bit and think, hey, how did we get to this position, and what are the figures and what are the details around this? Because COVID definitely provided the false economy. But if you listen to, I guess, the Betfairs of the world, the Tristan Merlehans of the world, and most of the smart punters like Daniel O'Sullivan, like John, and anyone with any sort of platform, these labour pains they're sort of 7 years old. Like, everyone's forecasted this big bubble to burst. COVID, I guess, caused the fake economy, and then now we're sort of getting back to where things were. And I guess it's advantage Victoria at the moment, because they've already, I guess, seeded some really good tracks like Pakenham. They've got the investment up at near the Inglis sale out there, and they're a couple of steps ahead, and they're also a couple of steps ahead because they've put a pause on the prize money, or they don't have this big glut of races that John's alluded to, and all these pop-up things that New South Wales need to sort of address, because it's going to run out. And I guess it's perhaps a saviour of potentially the whole industry, the no vote with Rose Hill, in my opinion. If the yes vote had gone ahead, there'd be no stopping New South Wales spending spree, and it would have been a bigger bubble, and it would have been further down the line.
John, you mentioned that you owned a lot of horses. You dealt with, as a jockey manager, dealt with trainers. I guess the art of placement, and also just the benchmarking system, or the programming in New South Wales, across the board, but obviously New South Wales with its, and Victoria with the rating systems, can that be changed for the betterment, or have you got a position on programming and how that works?
I've got a position on everything. But yes, and I have. And talking.
That's
and
why
again,
we've got you
owning
here,
them.
John.
Yeah, there's no doubt. I sit here and I talk to myself most of the time, so this is always fun. But yeah, well, we used to buy the horses. We used to buy maidens particularly, or if we bought sort of for two reasons. Maidens, we think, sort of had been misrepaired or whatever, or this is usually through Inglis secondhand. We bought yearlings as well for country trainers, but mainly sort of through secondhand markets, or we bought horses to sort of aim towards country championships. They were sort of unchained. Everything was okay with them because you knew that they were a better class in the area. You were expecting them to travel. But buying horses, particularly sort of maidens or lower grade horses for country areas, became obsolete because they're pushing actively any horse that shows any sort of ability away from its area when they're trained in the country. They're pushed towards provincial city training straight away. If you get an impressive winner of one of these $50,000 maidens somewhere, they straight away get a benchmark that basically puts them sort of midweek in town. And, that's no fun for the people I was placing in horses who wanted to see their horses race at, Wagga or Tamworth or Leeton or somewhere like that. It's impossible for these country owners to get the value out of their product to bother, being repeat buyers. And you can't sort of turn over horses, which we love to do. As soon as a horse sort of reached its mark or whatever ability wise, we would buy them a new one. We would sell, buy a new one. As soon as the class structures disappeared and it's benchmarking, and or you've got 90% of your races are benchmark 58 and below, it just becomes a waste of time and a waste of money, and it's just not fun for anyone involved, including the trainers. They end up with 20 horses in work, 18 of them are stuck on the merry-go-round. It doesn't make any sense. You need to return a structure of a stepping stone structure that they can progress through to allow them to, even if they're only got a lower class of horse, progress through their grades in their area.
I'd agree with that, John. I know with horses I've owned, and over the time, so quite often you're better off giving that horse, I'm not saying you're running it dead, far from it, but giving it 5 or 6 runs in a maiden. You don't want it to win impressively on debut, even though it's got ability and will win a few races. You want it So when you do win your maiden, you only can go to, maybe a rating 54, then you can win a couple of 58s. But if you go straight to a 58 rating, or, you're in trouble. And the same with the city trainers targeting the Oranges and Bathurst, because they know they're better off winning a maiden there to get a lower rating than winning a provincial maiden. It's quite, those that are blowing up, going to the country, well, those trainers aren't doing their owners a service if they are going and winning provincials with a limited horse.
You're literally burning money as a trainer. You're literally burning money if you do it any other way. And I would say that Bjorn Baker is probably the smartest operator now. He may be a little bit ruthless, but for his ownership, he's the smartest operator. Especially when he works with these Derby horses. You see horses like, is it Overpass? I think he started at Orange in a maiden. Steffi Magnetica, I think she won a couple of races at sort of Bathurst Orange. And it's not a coincidence. He uses these big country tracks to sort of blood them, whether it's Goulburn or, they're very nice places to send your horses, number one, to have a good experience, trip away. Like you say, you get the result, you don't get the punishment from the benchmark. The money's not too dissimilar at that low level, and you can progress. But, poor old whoever's stabled at wherever that country meeting is trying to do their best with their limited opportunities, is up against whether it's Annabelle, Björn, or somebody similar. So, you can't really knock them because they're doing the right thing by their owners, but it's not a level playing field for the country trainers, that's for sure.
Yeah, it's really interesting, that really interesting discussion. Sort of opened my mind to a few things as well, Tim, and you can catch that full podcast over the weekend, as I said, with a few review of that. We want to sort of have these longer, bigger conversations. We like to have our weekly straight talk discussion, but also, to open it up to people from across the industry to have this discussion as well. Thanks for joining us on Straight Talk, brought to you by our sponsors, Inglis and Darley. Don't forget to give us a rating wherever you're listening to our podcast, be it on YouTube, be it on Apple, be it on Podbean, be it on Spotify, all the places. Be sure to subscribe. Send us an email, editor@thestraight.com.au. Let us know if you've got things you want us to talk about, whatever else. And yep, we'll talk to you again next week.